In this video, I'm going to break down low resistance liquidity runs, explain the difference between low resistance and high resistance, and show you why I prefer using low resistance liquidity as my targets. First, let's understand what low resistance liquidity actually is and how it differs from high resistance liquidity. If you look at this example on the left, you'll notice a swing high that price never comes back to take. Price moves away, later reverses, and forms a lower high instead of sweeping that previous high. That tells us there is still resting liquidity sitting above that level. Because that liquidity hasn't been touched, price can move into it easily with very little opposition. That's why we call this low resistance liquidity. Now compare that to this example on the right. Here, price forms a swing high, then pushes higher, and sweeps that high, creating a higher high. Once that happens, the liquidity at the original high is already consumed. Since liquidity has already been taken, price faces more opposition around that area. This is what we refer to as high resistance liquidity. Why does this matter? Because it fits perfectly with my trading style. What I like to do is mark out all the low resistance liquidity that has been formed before the session opens, such as during the pre-session or previous session. At the market open, I'm not looking to jump in immediately. I want to see price first accumulate during the pre-session, then at the open manipulate, either by sweeping a nearby liquidity level or rebalancing into a fair value gap. Once I get my confirmation, my main objective is to target those pre-session generated low resistance liquidity levels because they have more resting liquidity and price can move into them more efficiently. You can clearly see this process play out. Accumulation in the pre-session, manipulation at the open, and then distribution toward low resistance liquidity. This is a perfect example of ICT's power of 3 in action. Before moving into the charts, I want you to know that you can get 55% off on all evaluations at QuantTechL Funded. If you're looking for a trustable prop firm with good spreads, you can check out the link in the description or use my code FAITHFX at checkout on QuantTechL Funded. For this first example, you can see that price has already taken and swept this high, so there's no reason for price to come back and retrace to that level again. That liquidity has already been consumed. However, what is left behind is a 15-minute unfilled fair value gap. You can see price retracing back into that fair value gap. As it does, price sweeps a 1-minute swing high and then continues to manipulate higher, taking liquidity from traders who entered early without confirmation. After that manipulation, we finally get our confirmation, which in this case is an inverse fair value gap. This is where we can now execute our trade. From that inverse fair value gap, our objective becomes clear. We target low resistance liquidity. You can see these lows are clustered close together, but do not overlap. Because that liquidity is still resting and untouched, price can move into it cleanly. And now you've seen exactly how identifying low resistance liquidity helps you define high probability targets. Here's another example. You can see that the order flow is totally bullish here, and there is an unfilled fair value gap again below the discount level. You can also see a 1-minute liquidity sweep here, and after that we have a breaker block as our confirmation for a reversal. Now we can take a trade and target all these highs, which are low resistance liquidity. You can see how easily low resistance liquidity helps in finding targets and achieving huge risk to reward trades. You can be so precise that you can even capture the highest point of the distribution. Alright, that's it for this video. I hope this example helped you understand how powerful low resistance liquidity can be for finding clean targets and high risk to reward trades. If you found value in this, make sure to like, share, and subscribe. And if you want personal guidance or deeper clarity on these concepts, you can connect with me through my mentorship. Links are in the description. I'll see you in the next one.